Okay. We're at it again. People are freaking out. The market has pulled back like 4 or 5% this week, just about, and a lot more on certain stocks. So is it really a time to freak out and panic? That's what I'm here to discuss with you guys today. So stick around because we're going to get right into it again. Hey guys, Corey here. Welcome to the channel. I hope you guys are having a great day. If it's your first time stopping in and you enjoy the content, be sure to subscribe and tap the bell so you know when I post new videos. And if you can give me a thumbs up, it would be greatly appreciated, as it helps the channel grow. Don't forget, you can sign up for the newsletter. Right there on the screen is the link, and in the information box below. If you sign up, you guys are going to get tips, strategies, and news right to your email box. And for the first 100 people that sign up right now from this video, you're going to get free trade alerts. And not only that, high five to everybody who's taken my trades. We have been making lots of money on Hims, Rivian, SoFi, Palantir, Robinhood, Lyft, and the list goes on and on. Also, I want to let you guys know before we get into today's video that I'm launching my full Discord and training course, one-on-one coaching and mentorship program. Limited space is available. So if you want to live your dream life, get better at trading, and have all the things you ever wanted, and you want to have a chance to achieve those, well, you want to sign up for my course, because I'm going to be coaching a very select few amount of people and teaching them all of my strategies. Slots are filling up. There's very few left, so it's first come, first serve. Be sure to email me, Corey@investwithcorey.com. I just want to point out that I'm not a financial advisor, and this is not financial advice. I'm just here to help you guys out with technicals, fundamentals, financials, strategies, and tips to teach you how to become a better trader. However, it's ultimately up to you to decide which stocks you want to buy and how much of a position size you want in those stocks, as it's your money. So we're going to jump right in and just talk about the market. And we had a pretty rough week this week. It was pretty rough, but you have to think about the fact that the S&P 500, SPY, is up 16% over the last 6 months. And year to date, even after the pullback, we're still up 11%. That is insane. And normally we see 3 pullbacks a year at around 5%, and there's usually like 10% pullback at least. Well, this is the second 5% pullback we've had, so it's really not anything out of the ordinary. SPY is also up 4% in 1 month, which is crazy. There's a lot of record highs in the Dow, the NASDAQ, and the S&P, so I guess a pullback was inevitable at this point. We still got to think about the issues going on in Israel and Iran, Ukraine and Russia, and China, of course, possibly invading Taiwan. The geopolitics situation is definitely something to keep your eye on. However, it really isn't what's influencing the market right now. We've got a lot going on stateside, and that really is what's taking precedence over this, and that is what's causing the pullback, in my opinion. The PMI data came back, which is basically the purchasing managers across 20 industries, which includes manufacturing and services. It shows the business PMI is at a 2-year all-time high, meaning the manufacturing and service sectors of business. The survey that they put across to these 20 different industries are showing record growths consistently, and we're at an all-time high over the last 2 years. And what that basically means is that businesses are going to be more confident. They're going to add more hours. They're going to pay their employees more to keep them on board. They're going to hire more people, which means the businesses will have more jobs, which means people will spend more money, and the circle repeats itself. And this might sound like a pretty good thing, right? I mean, it's great. People got jobs, and there's more jobs and more growth. This is really good. But the one thing that this is not good for is rate cuts. The Feds now have no reason to cut rates. You see, people are waiting for interest rates to be reduced, because when interest rates go down, money is cheaper. You can borrow it cheaper. You can get it pretty much cheaper anywhere because the interest rates are lower. And the moment the interest rates go down, it's going to translate into the stock market. We've talked about this before. They're going to move their money out of different accounts and different funds, and they're going to bring them over into the stock market, and the stock market is going to go up. However, the really important thing to understand about how the stock market works and how finance and how the economy works, if the Feds cut rates and it's not due to a good economy or proactivity, and they do it because things are broken with the economy, that is not a good thing at all. Do not let market makers manipulate you. Don't let mainstream media manipulate you. Use your head, clear your mind, think calmly and rationally. Every time the market pulls back, consolidates, and then there's an upward move, and we're selling at the bottom and buying at the top. Well, that's not how I do things. I am buying at the bottom bottom or fairly close to the bottom and dollar cost averaging, selling tons of covered calls and making juicy premium. I made tons of money selling covered calls this week. When the market consolidated and pulled back, all my covered calls expired worthless. So I kept all that juicy premium. There's no need to panic. This is a buying opportunity for you guys. When the interest rate cuts are reactionary due to breaking something or a broken or inflated economy, it could also cause the economy to slide. It could cause inflation to get worse. It could also cause a lot of other issues, which could be a recession. Remember, we have the 10 and 2 yields. They invert. That's also another issue to worry about. I think that's what's driving the pullback right now. That and the holidays. And a lot of the times you go into the stock market and you check it out, you'll see that right before holidays, there's usually a slight pullback. We got a holiday coming up. We got some geopolitics going on. PMI data suggests that things are really good in the business sector of the economy, although the consumer area and regular jobs and regular folks like you and I are kind of like still in the same scenario. So inflation is still high and interest rates are still high. Gas is still high. Cost of living is still high, although the business sector and the PMI data is really supportive of a better economy. They can't just go cutting rates. And now because it's looking like the economy's too strong and an interest rate cut would be more reactionary instead of proactivity, which is where it should be, people are starting to understand, especially people in the stock market, hedge funds, investment bankers, traders, really smart individuals that work in business are starting to understand that, okay, PMI data is so good right now, that combined with inflation, it's unlikely we're going to get a rate cut anytime soon. And if we do, when is it going to be? See, people are just waiting to dump their money in the stock market as soon as the interest rates go down. Once the interest rates go down, the stock market is going to jump like crazy. Now, I'm not going to say it's going to go up 100%, but we'll probably see anywhere from 5 to 10% the first week or two. Like, it's going to be a pretty decent jump. People are going to start buying everything up. And when you look at the history of the stock market, every time the Feds cut interest rates reactionary due to something being broken or because they were forced to, the stock market pulled back and it slid. The economy got worse. Every time the Feds cut rates due to proactivity, when the economy was healthy, when it was strong, not because they were pressured, but because it was the right thing to do at the time, because the economy was stronger, the market went up. We had a rise in the stock market. Everybody was making returns. There was more profitability. Jobs were better, and the economy got even stronger than it already was before the rate cut. A lot of people keep asking the same question. When are the rates going to get cut? When are the rates going to get cut? When are the rates going to get cut? I mean, everybody's asking the same questions over and over again. And it's really hard to say. No one really has this answer. The Feds don't have some telescope into the future to be able to tell us when they're going to cut rates. It's really a tough job to figure out rates, where to put them, like when to cut and when to increase. Like, just overall, the Feds have a very tough job with a lot of tough decisions. Geopolitics play a pretty big factor in a lot of things in the American economy, but we also have our own national issues going on, which also contribute to it. Rate cuts right now could happen at any time. It could be next month, the month after, but realistically, with my experience in the stock market and with my degree in finance and data analytics and looking at the charts that I've looked at, it is highly likely that interest rate cuts will happen this year, but it's most likely going to happen in November or December. And the reason I say that is because it gives us more time to correct inflation. And not only that, Christmas time, there's a lot of spending. Black Friday, there's a lot of spending going on. And if we cut interest rates right around that time, like right before, it means people will spend even more money. Money will be cheaper to get, which means there'll be more spending. It will help boost the economy. And I just feel like interest rates around the holidays is either going to be right before or right after. I don't see interest rate cuts coming prior to October, but that's just my opinion. I mean, it could, but realistically, it shouldn't matter. You guys shouldn't be panicking about the stock market going down. Look, I added 2,000 shares of American Airlines yesterday. I love that stock. It dropped below $14 and my average cost was $14.05. I just added to my position. It was the perfect time to do that, so I did it. I also added a little bit to Palantir, a little bit to Lyft, and a little more to Robinhood and Ford, and a couple of other positions I have, and I'm thinking about adding even more to my Affirm position because it dropped to $30, although it recovered just like I said it would. On Friday, it came back up another 50 cents because the 10-day crossed over the 20-day. So I'm adding to positions. You see, they do this all the time. Fear mongering. It's all manipulated. People sell off a little bit. Bad news. They're worried about PMI, so more people sell off. The price starts to come down. And then the algorithmic trading sees this, and it's irrational because it's a robot trading, and it sells off. The price comes down even more, and then people start panicking and they sell even more. It's a buying opportunity. Sit here and be controlled on this. There is nothing out of the ordinary in this country right now that's negative or bad other than some inflation, which we already knew about. I really wouldn't worry about any of this. It's my opinion that everything is going good. I'm going to take the book and throw it out the window on this one. Okay? It doesn't matter. When stocks go down, it's a discount. It's cheap. It's time to get in, right? It's not a time to sit here and panic because the stock market's pulling back. I'm not saying go crazy and blow every dime you have buying stocks right now because it could go even lower next week. Dollar cost average, buy a little now. If it goes down, buy a little more. Starts to go down, wait for it to level off, buy a little more. Then once it starts going back up, then start selling your covered calls. It's really a tough thing to time the market. Time in the market beats timing the market, and that is true for long-term investing and compounding wealth and dividend strategies. If you guys want to see my ultimate dividend strategy, comment below and I'll make a video on that showing you guys how you can make passive income on my double dividend strategy I like to call the double divvy. But in any case, if you're just day trading or swing trading weekly, bi-weekly, or basically anything less than 2 to 3 weeks, then you got to try to time the market the best you can. If you're running the wheel strategy, selling puts, selling covered calls, you're trying to figure out the bottom of a stock, the top of a stock. It can be difficult. You can get a general idea of that, but when you're compound investing, nothing beats just the amount of time you're in the market because a stock might go down, it might go up, but it's working its way in an upward direction. And in 10 years, if it's a good company, you're going to be in a profitable position anyway. One thing I always tell my students, open up your chart, zoom all the way out, and look at the entire graph and look at the patterns of the candlesticks and where everything's headed. And when you look at the big picture, you might actually be quite surprised to see that the pullback that happened over the last week and the one that happened in April is really not that big. And in fact, the one we had in April was bigger than the one we had this week, and we recovered all of it and then some. So it's not really something to be worried about. The pullback is all part of the holiday, the geopolitics, but mainly because of PMI. Everybody, every investor, every person like you and me, were waiting for interest rate cuts. But remember, why rush it? It's like trying to cook food and you're eating it not cooked all the way through. It's not fully prepared properly. The more time that you prepare something, the more time you put into preparing something, the better it is. So it might be a little bit longer for rate cuts. And it may be a little bit frustrating that time is going to continue to pass while we wait for the rate cuts to happen and come to fruition. However, what ultimately will make up for the time that we're waiting is how good the results will be once it happens. And the reason for this is because proactively cutting rates in a good economy, which is what we're waiting for and what the Feds are waiting for, will ultimately make the rate cuts synonymous with a very good directional upward trend in the stock market, which is exactly what we all want. Thanks so much for watching, guys. Appreciate you being here. If it's your first time, be sure to subscribe, tap the bell. This way you guys know when I post new videos. Be sure to sign up for the newsletter right there on the screen and in the information box below. First 100 people are going to get free trade alerts, tips, strategies, and news right to your email box. And I got limited spaces available in my course, so be sure to sign up for that. Also, I have very limited spaces available for my course. Very few left. If you guys are interested in learning how to grow your wealth and have financial freedom, location freedom, and time freedom to do whatever you want, be sure to email me, Corey@investwithcorey.com. This way I can reserve a spot for you in the course as I'm running out of spots. I just can't teach 10,000 or 20,000 people at one time, so I can only take so many before I have to pause and wait a few months before adding any new people to the course. So if you guys are interested, email me directly. Thank you so much, guys. Don't be sad. I know this video is over, but I picked a video just for you and you're going to love it. And it's right here. This video right here is going to show you how you can grow your portfolio from $5,000 to $100,000. You guys are going to love it. Click it and I will see you right over there. It's going to be awesome. Remember, guys, let's grow our wealth together.